Take 10. We're back.
I'm Corey.
I'm Lisa Wiles, and this is the podcast where we want to give you one more tool to close one more deal every single time.
Yeah, I'm being bullied during Halloween. They think they can scare me, and so I feel like a piece of content's coming out about that at some point. Just my suspicion.
I hope that got your blood pumping too, because we got some stuff to talk about. Some scary stuff happened yesterday.
It did.
Let's talk about the market.
All right. So the Federal Reserve concluded their meeting yesterday, and they lowered the Fed funds rate by a quarter.
Which was expected.
Everyone knew it was going to happen. There was a 95% chance coming in, 98% chance.
Everybody.
However, mortgage rates went up. How can that be?
Because, let me guess, because the interest rate decrease was already factored in like a month ago or whenever everybody thought that was going to happen. And then everything that Powell said at the meeting messed up our mortgage rates because what we're trying to do is hedge for the next round.
That's exactly right. You crushed it.
Good.
I don't even know why I'm on this. Yeah, so Jerome Powell came out in his prepared remarks after the rate cut and specifically said that there is strong opinions on the Fed about what to do in December. Not often that they talk about the next meeting at the current meeting. So he did this very intentionally. There's strong opinions about what to do in December, and that a rate cut in December is not a foregone conclusion, far from it. And so that was a very strong signal from the Fed that they may not cut in December. So people trade odds like they bet on horses or sports on this kind of thing.
Yep.
Going into the meeting, there was a 90% chance of a cut in December. After the meeting, that fell to 50. This morning, though, it's back up to like 76%. So you know these people trade odds. They're bettors. They're trying to call the Fed's bluff for a thrill.
The OB rate from last podcast was 30-year at 6.1.
Yep.
2, 4, 3, 7.
That's it.
8,
crushed it.
6, 7, 8, 5.
Yeah. So today, the average 30-year fixed that was locked yesterday went to 6.155 from a bottom the day before of 6.118. So, and that's crazy, guys, because the Fed meeting happened and rates shot up at 2 and 2:30 is when he started talking. And this index actually looks at real locks from yesterday. So to say that it went up, that tells you how many people locked a rate higher yesterday afternoon. A lot of loans got locked yesterday afternoon.
Because they think it may keep going up.
That's right. Rates literally changed, went up an eighth or a quarter in some cases at 3 o'clock yesterday afternoon. So,
and the pricing is wild. It's all over the place.
All over the place.
As you look at each eighth in rate, it's not tracking like where you pay a little bit more to get a better rate. Sometimes the better rate you pay less for. It's just wild and all over the place, and doesn't make a lot of sense right now.
Yeah, so it pays to have a great mortgage advisor right now because these are tumultuous times. And I would even argue a team of great mortgage advisors.
And we did advise people to lock prior to the Fed meeting.
We did. Yeah, we locked to several before the Fed meeting. So our people are protected. We love that. New contracts coming in. They're on their own.
No, we can just offset it with a 0.5% temp buy down. You know what I mean?
Advisor.
There's always another way to do it. And
That's
maybe
right.
you could even buy the rate down because there are sweet little pockets hanging out there still. But you guys, when we say that the Federal Reserve dropping the interest rate is not a mortgage rate, y'all got to listen to us at some point. And if you got to put it into your little chat bot and cross-check us, then do it.
Yep, that's right.
But
we
we're
give
not
straight
wrong.
facts, man.
These are just the facts, how it works.
So we'll see what rates do going forward. The cool thing is we're seeing sellers negotiate better.
And listen, they're still low.
Oh man, yeah, we're still at the
That's
lows of
fine.
the year.
Yeah.
So yeah, I'm thrilled with this.
Yeah.
So yeah, that's what's going on with rates. You know now. Tell your people the Federal Reserve does not control mortgage rates.
Yes.
In fact, if they do control it, it's just with their words, which is what happened yesterday.
Yeah, he needed to pipe down.
does need to pipe down.
Yeah. So let's talk about a couple things that have won us a couple deals this
That's
last
right.
week. Um, talk about the bridge loan again one more time. I know you guys have heard this, but we're going to couple it with another program that I think is genius.
That's right. You can't hear it too often. Okay. So contingencies are a problem, right? Homes selling are an
100%.
issue. So we've had lots of fallout with homes that just didn't sell,
We
right?
had 3 stacked up. This person had to buy this person had to buy this person, and so on and so forth. And the more people you stack up like that, the less likely any of them are going to close.
That's right. So all that to say, we have a bridge loan
hmm
and it's a good one. So we can go up to 90% in most cases.
It's
on
Fairway's bridge loan.
It's our own
Yeah.
internal bridge loan.
Yep.
So we control the whole process. You can go up to 90% LTV in most cases.
hmm
There is no payment on it. So they're not stuck with 2 mortgage payments. It's interest only for 6 months. That also means we don't have to count that payment against them. And the interest is due when the house sells and it pays off. So they're not stuck with 2 payments. They've got 6 months to sell the house.
hmm
Awesome program. And they can buy before they sell.
And check this little trick out. We did this. The bridge loan can be used to pay off a first mortgage as well.
That's right.
And so the bridge loan itself is capped at 300.
Yep, but
When
we
it's
can
a
make
second lien?
exceptions. Yep, we can make exceptions from time to time.
And so if you aren't in second lien position, you can go way higher than that. So
Sure.
we took out a very small loan with the bridge loan, put it into first lien position, and we were able to go up to 500,000 on the bridge.
Yep.
Which was cool and creative and definitely fit the bill on what we needed.
That's right.
Mhm.
Yep. And we have that product. The only reason that product exists, we don't make any money on it. It's not a profit center for us. It's just to get deals done. So they
Correct.
do have to do their mortgage with us
Mhm.
to use the bridge loan. That's an important take.
Mhm.
But yeah, solutions, guys.
What about
Let's go.
payments? Do they have to make payments on that bridge
No
loan?
payments on the bridge loan.
I know. How cool is that?
It's awesome. It's
So
a great
cool.
program. So get people involved early that
Mhm.
want to buy before they sell.
And sometimes we keep the bridge loan with other strategies. We keep the bridge loan as small as possible. So it keeps the costs down. And if they have any money and they can make everything happen, then you keep that bridge loan really small. And then when the house sells, you take that large lump sum of money, push it against the principal balance on the new loan, and we recast the payment. Also, at the same time, can drop the PMI
Mhm.
and come up with a lower payment as if you had put that money down to begin with.
That's right. And this is not a refinance.
No.
Refinance can cost $4,000 or $5,000. This
And-
is $500.
And you could be like subject to a worse rate.
That's right. Yeah. you
So
don't-
on a
and-
refi.
or maybe not even qualify.
Yeah, you get to
right?
keep all your terms. You just
Keep it
change
all.
the payment amount.
Just change the payment.
And
So
it's a pretty useful product.
right.
Especially
Yeah.
putting the two together.
yeah,
We are also in Q4.
we are, which means Q1 of 2026.
We should all be looking
Is around the corner.
forward because all the business that we're going to do in Q1 happens with the planning that we're doing in Q4.
That's right.
And so last year we had our business planning event, which came at it from a different perspective, more of a holistic approach,
Yep.
I would say, where you can't just care about real estate and be, you have to fill your own cup, things that you want to accomplish on your own, like
Sure.
your health, the physical like health side of it, and the feeding your soul and your purpose and all those things, the misogi.
That's
And
right.
it's a bigger world out there, and the more that you can take care of yourself, the more you fill your cup, the more you have to give. I listened to a podcast and the lady said, when I have to go, like when I want to go on a walk or a hike, she said, I'm doing this for the betterment of the tribe.
Yes.
I am taking myself on a
Yep.
hike for you.
That's right.
So I can be better for you when I
Yep.
get back.
I
And
love
so be better for your business by filling your cup.
That's right.
So we're going to talk about a new business planning idea. We want to do it again. We loved it.
Yep. We're in the planning process of the planning class.
Yes.
And so we would love your feedback on if you went to it last time, what you liked and what you would like to see maybe this time. So shoot us some ideas.
And we are going to switch it up because that's fun.
Yeah, we're not going to do the same thing twice.
Nope.
But we will focus on you as a person because it's like, why do you work anyway? Right.
That's right.
Like your business should fuel your life, not the other way around.
Correct.
So that's what we're
And
doing.
then you'll stay in it longer and enjoy it more.
That's right.
That's right.
Yeah.
We work nights, weekends.
After hours at themortgagegallery.com.
Yes.
And there are 2 G's in mortgage. MORTGAGE.
I was like, you're going to have to spell that one now.
Crushed it. So keep that in mind.
Yes.
And 8 days a week.
That's right.
Appreciate
Thank
you guys. Have a great weekend.
All right. Bye.